We've been chatting with Vikas Khemani and we should get to the pre-opening rates in a bit. Vikas, Indigo, with this boardroom battle now becoming public. Vikas, you can hear me? Okay.
Yeah, I can hear you.
Yeah, I was just wanting to know whether this boardroom battle is going to hurt the Indigo stock a lot.
I mean, it is sad that company of it is such a large company. This boardroom battles are coming out. Of course, investors would always be very sort of uncomfortable in this kind of situation. It's not that stock is very cheap, and of course it's a very good company. They have done very well, but I would definitely believe that investors would stay away for till the time. If you are invested, you can't do much about it, but investors would stay away from till the time this kind of thing settles out, and it's been brewing for some time. So one doesn't know. It is an industry which is otherwise notorious for not making money, and on the top of it you have management issues. So and so how things pan out. And today, while demand environment is very good, industry structure is very good, given jet is out, but they may not be able to capitalize on because of the all internal issues. So to that extent, I think investors should worry. But let us see. It's very difficult to sort of predict or to sort of guess what can happen.
Okay, because pharma is making some comeback, especially Sun Pharma, Glenmark as well. In between, we have seen some moves in Lupin. Do you have any stock ideas here? Any picks?
So we've been still, I'm not very sure about what's the right time to pharma. In the last 2 years, I have heard many analysts calling bottom fishing in pharma stocks, that worst is behind and all. But every time you think worst is behind, still there seems to be more. I mean, Sun Pharma, I've been hearing from analysts right from 400, 500 levels, to start bottom fishing. So I would say that it's better to let the dust settle down till the time clarity comes. At least we don't see any significant change fundamentally speaking. Of course there are some stocks in the value zone, but you don't buy stocks only because they're into value zone, unless there are triggers to kind of come back and the growth comes back. So we would still would want to wait for the clarity to emerge, even if you don't mind buying a little expensive from these levels, but let the clarity come. So we would right now, risk reward perspective looks interesting, but we would still not pull the trigger.
Okay, Vikas, just stay on for a bit. I also want to ask you about stocks like Bajaj, Finserv, etc. But let's discuss the big stock of the day, TCS. The numbers were below street expectations and the management commentary was a bit cautious. Apurva Prasad of HDFC Securities joins us on the phone line to talk about that. Apurva, hi, good morning. Your thoughts on how the stock would react today, and what did you make of the management's commentary where they said that the softness in BFSI was much more than what they anticipated?
Hi, good morning. So I think some of the things which they cautioned on BFSI are areas that they talked about in the previous quarter too. So it's just that, some of the deal flows have probably got pushed out. But if I'm looking at basic metrics, such as, the hiring momentum as well as the deal bookings, even on a YY basis, that gives me reasonable confidence that double digits should not be too challenging for the company.
Okay, it's starting, TCS is starting about 2% lower. Well, to be fair, it has fallen from what, 2,300 to about 2,100 already. But at the moment, it is starting with a 2% downtick. What price will you be comfortable buying it, Apurva?
Yeah, so I think it's trading at about sub 21 times right now, which is close to its historical, mean valuation. So I think which makes it an attractive proposition given the growth opportunities. I mean, let's not forget their digital book, it's a 7 billion annual run rate. That's growing at 42%, and that's doing bulk of the incremental growth. So that continues to look pretty strong. And some of the verticals which were softer, I think that should start recovering. So retail CPG being one of them. So I think we're getting into a zone where earnings momentum can be back.
Okay, earnings momentum can be back. Apurva, thanks for giving us your quick thoughts. So that's the word coming in from HDFC Securities. But getting back to the pre-opening rates, I think some of them have started to kick in right now. So we'll wait by for them to adjust. But some key stocks to look at. Let's see what's happening with Titan. Day 2 after that 12% fall that we saw yesterday on Titan. The first tick is, okay, there's hardly any recovery. I mean, it's just stabilizing around that level. So keep an eye out on that. Indigo is the other one that, of course, will be under pressure because of that promoter feud. So Indigo is now, I think in pre-opening, it's down almost about 2% or so. Let's just revise the rates. Okay, 10% knockdown on Indigo this morning. So that will be the big stock in focus. And Bajaj Finance as well. Yesterday, it recovered about 5% after reporting that AUM growth of 40%. Bajaj Finance trading now with unchanged at the moment. So I guess we'll just wait by for these rates to adjust.
Bajaj Finance.
Bajaj Finance.
By the way, UPL is down another 2.5%. So that read these names. UPL, SRF was the other one, which had declined yesterday. So just keep an eye on some of these names. Just a word on TCS. It's opening 1.5% lower as of now, 2% perhaps, which would be yesterday's low, and that would make the overall correction about 9% from the highs. This is in anticipation of these numbers perhaps. So let's see, the 200-day moving average is 2034. So does it go there or bounces back before that? We'll find out. But for now, that would be, of course, the stock to track in the morning. And we'll also watch out for the rest of the IT pack because there also perhaps there could be some issues.
Infosys comes out with numbers on Friday, so ahead of that as well, I guess there's some amount of caution, down almost 1%. TCS is your biggest loser, down 1.5% at the moment. I just wanted some quick thoughts from our technical experts as well, if we can go across to them. Mitesh, on both TCS and Infosys, what are your thoughts? I mean, TCS now is threatening to break that 2100 mark. If it does that in morning trade, what would the advice be?
Good morning. So I am looking at 2050 as the target. That's where a couple of weekly averages are placed. So I think 2100 will be break and I think we will see 2050 being tested. If that kind of level violates, then I'll look at more declines. Infosys on the other hand, it's been doing a range of about 7.5, 7.10 on the downside to about 7.55, 7.60 on the upside, and now we're at the lower end of the range. So I think I would take a fresh shot only if we start closing below 7.05 here.
Okay. Vikas, I just wanted to come back to you on another set of stocks where I wanted your thoughts. The public sector enterprises. There is a big divestment move, but on the other hand, the chances are that the stake will be brought down below 51%, in which case they would be out of, CAG and CVC. I wanted to listen carefully to what a colleague of mine is breaking as a story, because it's in front of the cabinet, and I want your views on public sector stocks. This is Sapna Das, our colleague, who is breaking this story.
The first of important clarity that comes in on the big disinvestment policy announcements in the budget is the fact that the government will have to seek, or rather seek the cabinet nod, every time it decides to bring its shareholding below 51% in any of the CPSCs. So in order to make its task easier, Finance Ministry may look at a consolidated approach, in the sense a consolidated nod from the cabinet by clubbing 5 or 10 CPSCs together, where they intend to bring the shareholding below 51%. So that's one. Second, probably, the government is giving a very clear indication that they're willing to realign their own shareholding in CPSCs on the lines of promoters in the market, which means that not just the fact that 51% may not be a barrier anymore coming below that, but the fact that, GOI shareholding, if so deemed fit, could also be around 40-odd% levels or below 40-odd% levels. So that's the second one. The third, of course, however, while ownership issue is not an issue, is very clear over here. The issue here is basically the control stake. So here, while calculating the control, the Government of India shareholding will be added to the shareholding of the government-owned companies which are sitting in that CPSC at that point in time. So basically, this will include your cross holdings, this will include your PFIs, which are basically the public financial institutions, how much they hold in that particular CPSC at that point in time, and altogether this will have to be at 51% and above, which basically means that control of these companies will continue to remain with the Government of India. The expectation in Finance Ministry is that this will really push up float, and this will attract passive international fund investors who have been sitting on the sidelines, and possibly a good beginning could be in terms of bringing more investments into ETFs. For example, ETF 1,000 crores was attracted in FY19, but the government could retain only 45,000 crores out of that.
Okay, so that was what Sapna filed. Vikas, I didn't hear much about whether they will be out of government clutches. It looks more like a money-raising idea. Would this worry you now about CPSCs?
I think structurally, Lata, I feel that this government made a very big mistake, in my opinion, of not walking the path of a strategic divestment very clearly and aggressively. I think this PSCs have a problem with the governance structure. Whether you own 50%, 51% or 40% doesn't matter. I mean, once government owns it, it means that, they can always control it through whatever ways. Because, government is also a lawmaker, they control regulators, so, it becomes very hard. So I believe that the first and foremost need is to do strategic divestment or address the governance structure. Now, if they make it very clear that they are out of CAG and all those purview, then I think obviously it will give definitely relief to the PSUs from operating perspective. But then how do you build checks and balances? Because otherwise the checks and balances are built through either having a very governance structure within the organization which is very meritocracy based. So how do you appoint a managing director? How do you run the board? All those things are unclear in PSUs. So I think unlikely that, in my opinion, the only answer to create some value out of PSCs is, I mean, we had a time when BSNL could have fetched 30 to 40,000 crore rupees of valuation. Today it is losing, and government is capitalizing a large amount of capital on that. So I think it's a time that government realizes that best thing to create value out of this is to divest them, and they can always retain some value like they did in Hindustan Zinc, where they can create participate in the rest of valuation. So I would not buy PSCs just because they are value. Of course, they are very good businesses, but because of the management structure, PSUs will never create structural value or potential which it has. In a way, it is a lose-lose and value destruction kind of proposition which is continuing.
Okay, because stay on, we'll have a couple of more questions for you, but before that, let's just address the commodity markets. Manisha will tell us what's happening here. Manisha, good morning.
Morning, Anuj, and thank you for that. Well, we have seen strength come back in case of the crude oil prices, more than a percentage point up in the Asian markets today. And this is as the markets are anticipating a fourth weekly decline in the US inventories by nearly 8 million barrels this time around, and that really has been supportive. Also, you are looking at the US and Iran tensions just about continue. There are warring words between both of those countries. And then a part of that, the latest China data has come in slightly on the positive side, and that has led to buying in the crude oil prices. No such luck for the metal prices, where you are looking at the base metal prices continuing to decline. Zinc is declined for a fifth straight day today. We are trading at a 6-month lows on Shanghai and LME for that one. Copper prices have continued to decline as well. We are 20% down now from one-year highs. And if you look at the inventories, they have jumped up by 24% in the month of July. That picture has been slightly on the weaker side, with the inventories also increasing now. That is putting added pressure on the metal prices. Also, the dollar index is trading at a 3-week highs, and that's yet another reason that many of these dollar-denominated commodities have started Asia slightly on a weaker note.
All right, Manisha, thanks a lot for that. So that's the update as far as commodities are concerned. It looks like it's going to be a flat opening. But Vikas, before we let you go, Bajaj Finance was one of the big gainers yesterday after that 41% AUM growth that the company reported. Would you buy that stock now?
I mean, it's an exceptionally good company. They have delivered a lot of value, but I feel that, given the valuation, the risk reward does not justify. Because I think most markets are also expecting a continuation of aggressive growth in that, and that's why markets stock corrected when there was a little bit hint of drop in the growth. And it's not that company will forever be able to grow 40%. So at a large base, it becomes usually harder. So I think I would believe that while it's a great company, I love Sanjeev has done a great job in terms of, but as an investor from a risk reward perspective, I would sort of not buy.
Okay, Vikas, we'll leave it there today. Thanks a lot for joining us.